All right, let's dive right into this explainer. Today we're unpacking a truly fascinating development in the crypto space called NeuralTrade. We're going to break down exactly how it uses a hybrid algorithm and AI architecture to completely rethink automated trading on major platforms like Bybit and Binance. Now look, automation itself isn't exactly new, you guys know that, but the way this particular system actually structures its intelligence, well, that kind of changes the whole game.
The source material kicks things off with a brilliant quote that I think perfectly hits the nail on the head for every trader out there. The crypto market never sleeps, but you have to. It's honestly the biggest friction point in this entire space. You absolutely need 24/7 vigilance to catch those sudden momentum shifts, but since we're all human beings, you literally cannot just stare at charts all night long.
So, the million-dollar question, can you actually trust a bot to run things while you sleep? Historically, for a lot of retail traders, that's been a very painful no. You see, traditional blind automation relies on these highly rigid, static rules. It just blindly follows a moving average or a basic RSI indicator. And because it can't adapt to sudden market shifts, it so often gets traders completely trapped in false breakouts, or even worse, it panic sells during minor, totally healthy dips.
Okay, let's look at how they tackle this in Section 1, Enter the AI Auditor. To fix those massive blind spots, NeuralTrade uses a two-level decision process, where hard algorithmic data and an AI auditor basically team up to protect your capital. First up, a quant engine scans the market, constantly analyzing over 18 technical indicators in real time. But before it actually executes a buy, it stops and pings the AI. The AI then grades the overall macroeconomic safety on a simple scale of 1 to 10. Finally, a strict math algorithm combines both of those scores along with your specific risk profile to decide on execution. Now, what's really crucial to understand here is that the AI doesn't just run wild and execute arbitrary trades on its own. Not at all. It operates strictly as a conservative co-pilot to vet the quant engine's signals. By keeping the AI completely in an auditing role, the whole system maintains a really transparent mathematical baseline, while still gaining that much-needed contextual awareness. It can actually spot the difference between a structural market collapse and just a normal, everyday pullback. Which brings us to Section 2, Inside the Smart Filter Stack. If you've been in crypto for more than a minute, you know that keeping the money you have is just as important, if not more important, than making that next big trade. That's where their concept of the hard veto comes in. Even if a setup looks incredibly profitable to the standard quant engine, an AI hard veto can just override the whole thing and block the entry. It's an absolute non-negotiable stop. This is what saves you from buying the local top purely out of FOMO right as a massive sell wall drops. To pull this off, the system constantly cross-references these institutional-grade filters. For instance, take the SMA 200 trend guard. If the price is sitting below that 200-day moving average, the bot instantly recognizes a macro downtrend and just safely stays on the sidelines. It also uses an anti-trap veto and supply absorption metrics to essentially track if whales are accumulating. Long story short, only the absolute most flawless setups can survive this gauntlet. And listen, when you are actually in a trade, your risk management absolutely has to adapt. Instead of following arbitrary fixed percentages, like setting a rigid 1% stop loss that gets wiped out by normal volatility, this bot dynamically calculates your stop loss and take profit using the average true range. So your safety nets literally stretch out and contract to perfectly match whatever the current market volatility is doing.
Let's move on to Section 3, Your Personal Risk Dial.
Because no two traders have the exact same stomach for risk, the system gives you a simple 1 to 10 scale to dictate just how strict this AI auditor behaves. Say you're a conservative user, right? You set it somewhere between 1 and 4 for maximum protection mode. The AI becomes extremely strict and literally waits for perfect alignment. But if you're feeling aggressive, cranking it up to an 8, 9, or 10 lowers those entry barriers, unlocking some highly agile scalping capabilities to catch really early trend reversals.
Going just a bit deeper under the hood, the underlying Python engine further refines all this using specific scoring. It doesn't just think in blocky black and white yes or no terms. It uses what they call elastic contextual penalties. So a trade setup might actually look pretty decent on paper, but the system will proactively slap a minus 1.5 point penalty on it if it detects, say, a sudden collapse in trading volume. It's constantly adjusting to ensure you aren't walking blindly into a trap.
All right, on to Section 4, Secure Non-Custodial Execution. At the end of the day, having a genius algorithm means absolutely nothing if your funds aren't perfectly secure.
That's why NeuralTrade operates exclusively through a non-custodial API connection. It connects straight to exchanges like Bybit and Binance, and it only asks for trade permissions. Let me repeat that. It only asks for trade permissions. The bot cannot ever access, manage, or withdraw your assets. Your crypto stays exactly where it belongs, fully under your control.
Now, for the traders out there who still want a hands-on approach, the ones who don't want to just hand over the steering wheel completely, they've included a really cool hybrid trading mode. You can actually step in, open trades manually yourself based on your own gut feeling or chart analysis, and then just let the AI seamlessly take over the boring, complex task of trailing your profits, moving your stop losses dynamically, and guarding you against those sudden, nasty market reversals.
So we've walked through how integrating an AI auditor can mathematically shield your portfolio against the dangers of emotional trading. Now, a quick reality check for everyone. Crypto volatility is no joke. It carries immense risk. Absolutely no algorithm on Earth guarantees profits. And as always, you must do your own research. But seeing how this technology handles capital preservation certainly leaves us with a provocative question. In a market that literally never sleeps, isn't it time your risk management finally evolved?